This is all about Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee. Taking a look at our top stories, well, out of the blue, a U.S. lawmaker who previously showed little interest in cryptocurrency has introduced what may be the most sweeping legislation yet to regulate the market. U.S. Rep. Don Beyer of Virginia, his bill would allow the Treasury Secretary to veto the creation of stablecoins, direct regulators to define rules for decentralized finance, and possibly create a charter for crypto exchanges, among other measures. Meanwhile, Square's Cash App services Bitcoin quarterly revenue rose 200% to nearly $3 billion, while Bitcoin gross profit jumped to $55 million from $17 million, according to the company's second quarter shareholder letter. However, the company also reported a $45 million impairment loss on its Bitcoin holdings. And Bank of America report saying Bitcoin adoption could bring flows into El Salvador, that is, international flows. A more favorable outlook compared to ratings agency Moody's, which downgraded El Salvador's rating Friday and continued its negative view on the country's economy, partly because of the government's passage of a law that will make Bitcoin legal tender in the country. Moody's noted a, quote, deterioration in the quality of policymaking in the country. Let's take a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently trading at $39,676. Bitcoin is down about 3.4% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app. Fresh off of posting its biggest weekly gain in 3 months, blockchain data suggests that dwindling Bitcoin supply could trigger further advances in the future. Glassnode data shows Bitcoin's illiquid supply, or the balance held in illiquid entities, as shown in yellow, decoupled from prices in May, shown in gray, signaling renewed holding sentiment. A similar split occurred for several weeks before Bitcoin began its meteoric rise from $10,000 in October 2020. If the illiquid supply continues to rise, CoinDesk's Omkar Gaboli saying a supply-side crisis may emerge and last year's price surge may be repeated. Other blockchain indicators also signal an impending supply squeeze, as tweeted by analysts Willie Wu and Will Clementi. Bitstamp data showing Bitcoin added 12.4% last week, the most since April. And joining us now to discuss is Edward Moya, Senior Market Analyst at OANDA. Welcome to the show, Edward. Thank you for joining me. So, taking a look at this illiquid supply, is there anything to it? We did see Bitcoin rise and break 42,000 over the weekend, and now it's coming back down. But what do you say is the catalyst for this bounce?
Well, right now, I think you're seeing that the institutional world is slowly alleviating their fears that the Bitcoin mining problem, as far as getting activity out of China and into other countries, that's progress has been made there. And also on environmental concerns, we're seeing there has been tremendous progress in getting into renewable energy. So I think right now, you're seeing there is just too much pent-up institutional money on the sidelines that's just looking to get in. And I think there was this kind of wait-and-see approach. Bitcoin for the past couple months has been consolidating between 30 and 40,000. And a lot of investors were targeting, well, we could see a mini flash crash, maybe possibly to 20,000, 25,000. That never happened. And what happened is you've seen steady institutional flows. It's been methodical. That has really taken Bitcoin right back up towards the upper boundaries of this recent trading range. And I think you're probably seeing that the market has been really fixated on global bond yields right now. You have not seen much of a steepening of curve in the U.S. The German 30-year bond yield turned negative today. So there's a lot of investors that are looking for duration. And I think you're probably going to see that until we get a better sense on what the Fed is going to do as far as tapering asset purchases. Right now, Bitcoin's in a pretty opportunistic opportunity right now. I think you're going to see people are going to be gravitating towards it, as you're probably going to see a more dovish stance kind of be cemented over these next couple months.
Are you seeing any correlation between Bitcoin and the crypto markets moving with the stock market?
That correlation's been it's been difficult to track because for the longest time you've seen really Bitcoin just be just a risk-on asset. I mean, when we had some moments of panic selling when the Nasdaq was down 10%, Bitcoin was sold off pretty severely. But right now, I think you're in a position where you're going to start to see Bitcoin once again exert some inflation hedge like flows. And I think you're probably going to see that over these next few months, it's going to be a very choppy market. All of Wall Street is. The market's been overcrowded. The stock market's been a one-way trade. And I think you're going to probably see some, I think probably heightened volatility there, and where we might see some stock market pressure weigh on Bitcoin. I think that as long as we see the Fed remain with the belief that inflation will be transitory, that should be rather positive for Bitcoin. And I think you're probably going to see that those macro drivers are really going to reassert itself and provide some support, which was not the case earlier in the year.
I wonder, what do you make of the regulation and the legislation being debated in Congress right now? We've got a $1 trillion infrastructure bill. Part of that will account for about $30 million in taxes that Congress hopes to raise from crypto investors, and a new crypto bill from Representative Beyer. Could that possibly have a chilling effect on the crypto markets?
I think the biggest question right now, and yes, regulatory fears is really kind of the biggest fear that long-term bulls have for Bitcoin. But I think Bayer's his approach and these more harsher regulatory environmental or stances are likely to just grow, I think, over these next couple of months. The Fed's going to release their paper on digital currencies, and more importantly, we're going to hear from the Biden administration whether or not Fed Chair Powell's term is going to be renewed. Right now, it's set to expire in February, and if he is replaced, the leading candidate is going to be Lael Brainerd, and she's very supportive, I think, of stable coins, and I think you're probably going to see that would be actually somewhat positive for, I think, the whole cryptoverse, and I think this regulatory debate is going to really intensify. But I think the one thing that I think should alleviate a lot of people's concerns is that 3 years ago the retail world wanted Bitcoin, but now it's the institutional world. So I think you're going to see that fears that the party's going to end is that no one's thinking that right now.
Edward, I wonder if you could comment on El Salvador. So Moody's downgraded their rating of the country, and a lot of institutions or investors who would like to invest in El Salvador may have to exit their positions because they're not allowed to be involved with a country with a low rating like that. Whereas Bank of America, a new report out saying that potentially it could attract foreign direct investments. What are your thoughts?
Well, I think right now it's fascinating to see that El Salvador, what they've done. I think they provided their economy with a chance to be a crypto hub, and as there are many crypto millionaires, I think that this is still early. We haven't seen other countries really follow their lead, but I think the opportunity is there. I think that you're probably going to see that as far as the cryptocurrency market, El Salvador, I think this is it should be net positive for their country. And I think the rating agencies are always a little bit more pessimistic and more cautious as far as taking on new ventures. And I think that you're probably going to see that the majority of Wall Street will agree with Bank of America. And in the end, Latin America has been ravaged by the pandemic, and I think right now debt has no one has their debt situation under control. So I think everyone is going to be somewhat constructive, and I mean, you could even see it across like Colombia. They just got downgraded to junk. They have one investment grade status being held, and still Wall Street loves them. So I think
Edward,
this El Salvador news will pass.
We've got to wrap up, but 30 seconds. I just would like to know your prediction for the end of the year for Bitcoin.
I think you're going to see volatility once again, but I think probably we're going to make a run towards the 60,000 level.
All right, Edward, thank you so much. That was OANDA Senior Market Analyst Edward Moya. Coming up, the impact on miners from Congress's new infrastructure bill with top mining rig maker Bitmain.
From fueling local economies to connecting global markets, the future of money is taking shape now. Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers to tell the global story of decentralized finance. Join us for this virtual event series as we make stops in Israel, Bahrain, and the United Arab Emirates to dive into the movements that are disrupting markets and changing communities. Register today.
An updated version of the U.S. Senate's bipartisan infrastructure bill narrows the definition of broker for the purposes of crypto tax collection, but opens the possibility of including miners, decentralized exchanges, node operators, or other parties that would be prohibitive in practice. The bill, which is being debated by the Senate, funds around $1 trillion in infrastructure improvements across the country and would be paid for in part by about $28 billion in taxes generated from crypto transactions. And joining us now to discuss is Irene Gao, and Miner Business Director at Bitmain. Welcome to the show, Irene. So, Las Vegas-based Marathon just announced that they are buying 120 million of Bitcoin mining machines from Bitmain. And recently, Bitmain has also signed a deal with ISW Holdings, a holding company with a very busy business portfolio to launch crypto hosting and mining services in the state of Georgia. So, you have lots of activity in the U.S., but when you hear about this infrastructure bill that could impact miners, what does this mean for miners?
So, this year we move more and more business to North America, and it's become the most active market for us. And there's a lot of opportunities generated just because a lot of benefits in North American markets. For example, we're working with our strategic partners to have cooperation in the hosting service area, and which allows us to drive our industry by adoption of green energy, and which plenty benefits for the markets. It's really friendly to environment. And I think that's one thing really do good to our industry. On the other hand, by building out these infrastructures, a lot of job opportunities be generated. And we were talking with the local team a lot, as there's some, we will create more jobs for the local laborers and right. With decent salaries. And at the meantime, so moving some of our training sessions to North America to enable us provide the professional training to the people and enable them to have a better right. experience.
Well, Irene, as you expand business into the United States, there is currently an infrastructure bill being debated in Congress that says that potentially miners will have to have enhanced reporting requirements, tax reporting requirements on people and transactions being made. Is there any concern that unclear regulation in the United States may have a chilling effect on the mining industry?
So I feel like, as more and more miners came to the industry, if there's any regulations actually lead to a real regulated industry, I think it's definitely a benefit for our industry. And as more and more people go IPO or goes back, I think if clear regulation will be generated definitely. So I think it's definitely good to our industry.
Right. Well, Bitmain has recently gone or had to remove many of its operations in China due to a recent crackdown on mining in China. So what is your take on the impact of China's crackdown? Do you still have operations there, or have you had to now figure out a different strategy?
I think you may read a lot of articles talking about it. For us, we are a leading producer of mining equipment. We actually have more and more big clients in North America, and I feel like it's definitely the influence of industry by decrease the mining capacity a lot.
All right.
So I feel maybe next year there will be more and more mining infrastructure will be built out in North America.
Okay, interesting. Well, hopefully this infrastructure bill won't be an impediment toward that. Irene, thank you so much for your time. And just want to remind viewers that the World Digital Mining Summit hosted by Bitmain is happening in September. All right, that was Bitmain Antminer Business Director Irene Gao. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.